Welcome, everyone. And today we are going to talk about three investment models that have been very popular, especially in the past 2 years. So let's dive deep into what is the pros and cons of purchasing a investment property on long-term rental, the pros and cons about mid-term rental, and the pros and cons on a short-term rental investment strategy. All right. So that with that in mind, I'm Sylvain Yi and my co-host is Julie. Thank you for attending, Julie. How
Hi,
are
good
you?
morning. Thank you. Saying I'm fine. How are you?
Yep. Very good. We can go over it and based on our experience level, you know, you have a deep dive to share what all this means. Okay. So pros and cons of long-term rental, mid-term rental, and short-term rental. Let's begin by going over the pros and cons of a long-term rental. Okay. Before we go over, let's go over several pro forma. When you buy a long-term rental, you buy 20 to 25% down payment, maturing cash flow, right? Yeah. You're going to
Absolutely.
buy in the Midwest, buy in the South and Southeast. That's our opinion is the best area to buy capital property. Okay. And of course, these are some of the type of property you buy long-term buy and hold. That means you rent it to a tenant. Then you hire a professional property management company. So whether you live in California, where most of our investors live in, you buy out of state, you buy remote, you buy long distance. This is the investment methodology that we've been practicing for several decades within my network, and in which Julie also properties in a lot of these areas. So let me share with you some other additional capital properties, a long-term buy and hold. So all these are capital properties in good markets in Florida, in Texas, and Midwest. They buy it from a white team, then it doesn't matter. The 1 unit or 4 units, new construction, resale homes, you surround yourself with a great team on the ground that do all that for you. So, Julie, let's go over the pros and cons of a long-term rental. So, let me give you my brief analysis. Long-term rental, the pros are that, especially when you buy from long distance remotely, which we've been doing for a long time, like you just said, and forget it. Let property management pay the property management around 8% of your rent. They do everything for you. They pre-screen the tenant. They fix the property for you. They do all the communication. You almost do nothing. Buy it with your own name, 100% yours. No need for partnership. In fact, I do not like partnership. I do not like syndication. I do not like you buy directly under your name or in the name of the IRA for that matter. So, so to me, look, the pros long-term rental is almost passively. You don't have to, there's no need for you to do it, blood, sweat, and tears.
Right.
Meaning, meaning you're not doing any kind of work. If you're delegating mostly everything to the property manager
Mhm.
around. So where you buy long-term rental, your tenant could sign a 1 year lease most of the time. And more often than not, they're going to renew the 1 year lease into the second and third year, sometimes even longer.
Mhm.
And you almost do nothing. You just collect the rent and property management do all the dirty work for you. And they collect the 8% management fee and they give you the rest of the money, wire it into your checking account.
Mhm.
Almost. So the pros are you can buy one rental at a time consistently year to year. You can scale your portfolio, whether you buy a single family home, duplex, triplex, or fourplex, up to 4 unit. This my thing is. Then you can scale. You can continue to work your full time job and still grow your portfolio over time and spend almost very little time by not self managing. Some people promote self managing. You watch other
Mhm.
YouTube channels, bigger pockets, whatever they promote. You do everything yourself. But for most people who work full time and they're not willing to give up their job, they're very busy. This kind of key delegating to a professional property manager do all the dirty work for you over time, over the years to achieve generational wealth. And the cons, that what is the cons? The cons are the cash flow upfront is not as high as before. 4, 5, 6 years ago, the cash flow was great, but now the cash flow is not as great. Now, if you buy in the wrong market, the cons of the long-term rental is the rent is barely paid off the debt obligations and your cash
Mhm.
flow is low at the end of the first year. short term. So that is the con. I can't think of anything more.
It's so funny as you were talking, because again, our strategy, my husband and I, it was a long-term rental strategy. And as you were talking, I was still thinking, what are the cons? I don't have any. I come up with nothing because it's all gravy. It's all win for us. But I can understand what you're saying. The interest rates are a little higher, and depending on what the area is, you may not get that much cash flow. But again, I think that's more of a result of the economy and the interest rates versus the actual ownership of the property. So
Yes.
yeah, I don't have any cons.
Well, you're being transparent. You'll be utterly honest. I agree with you. I know your portfolio. You bought 6 properties through my network in the Midwest area, if you will. And for the past 2 years, for the past 4 years since you bought, you have not seen too much cons because
No, there
you
isn't any.
you have experienced very little maintenance
Right.
issues, very little vacancy issues, and which is contrary to perception out there. You buy older properties, you're going to have a capital expenditure that's going to impact your profit. Not in your case, right?
No, not at all. So we're good.
Yeah,
No cons here. Only
good.
pros.
Okay, all right, very good. Yeah, I personally like the long-term rental model, especially when you want to scale more properties to increase your wealth exponentially over time, long term. So
Right.
not long. Especially in my case, I love to travel. I've been traveling so often for the past all my lifetime, really. And
Right.
I want to self-manage. I'm okay with a little bit lower cash flow at the beginning, but the
Right.
over time, you and I know,
Hmm.
with the inflation, you can raise your rents. The tenant gonna make you rich. Yeah, no cash flow the first
Right.
1, 2, or 3 years.
Right.
But you know, down the road, you can see more
Mhm.
cash flow. You can see more
Absolutely.
equity growth. You can see
Absolutely.
more appreciation. You're going to see more debt pay down. You can see more tax benefits. Okay, let's go over the medium term rental marketplace. Something that a lot of people still are not aware. This is the up and coming investment asset class. And so it's still right now it's at an early stage. So medium term rental, in case someone have not been to our channel and you have not done any kind of research in the past few years, medium term rental is whereby you fully furnish your unit
Mhm.
and pay for it. Cost anywhere from $10,000 to $20,000 to fully furnish your units, and then you rental from anywhere from 30, 60, 90 to 120 days typically. And you rent to
Right.
traveling nurses, you rent to healthcare professionals, you rent to digital nomads, you rent to people who lost their home in a fire, you live insurance agencies, you rent to people relocating to a new area and they need a space to live for a few months before they buy a new house, whatever. And you do it for business professionals who are moving to an area for a few months to work and they need a furnished unit and they're willing to pay higher rent. So
Right.
so the pros and cons of medium term rentals are the pros where if you do it right, if you set up the right system, for example, you can use Furnish Finder, which is a good platform for marketing your medium term rental. And you can even use Airbnb to market your medium term rental and of course you have to pay the fees. So the pros are potentially in a bare bone minimum. By doing a medium term rental, you can increase your gross rent at least 50% higher compared to the long-term rental rates that you can collect.
Hmm. Hmm.
And the cons are it takes more work, right? It's not set it, forget it like you do in long-term rental.
Right.
You have to do a little bit of work, especially upfront. You have to most of the time self-manage. Yes, you can still self-manage a medium-term rental long distance remotely. You can still do that, okay? Because there are a lot of resources out there or available for medium-term owners to self-manage. And yes, furnish finder, resources, and whatever. And also, so the pros are put in some extra work. You have to work with, spend 2 more hours per week to so-called manage your mental rentals, and you collect more rent and more cash flow. Okay, that's the pro.
Hmm.
And the cons are the potentially the if you don't know what you're doing, the vacancy factor could be an issue. The maintenance could be an issue. How do you market your property? All those things are cons. So, what are your thoughts? What are your
Hmm.
cons associated with a medium-term rental investment model?
I think you said the main pro rather is you are going to get a huge bump in your rental. And I think with the client or the quality of the tenant, like you mentioned, medical professionals, healthcare professionals, traveling nurses, construction, digital nomad, you're going to get a good quality of tenant. So you're going to be assured that the rent is going to be paid by these tenants. Again, it is a little more hands-on, as you said. You may, instead of spending an hour a month, you might have to spend 4 hours a week. But so even someone with a full-time job can do that. So I think that is definitely an advantage for some people if you want to be a little more hands-on in the business. And yeah, it's a great potential for getting the much higher returns than a long-term rental. So little more risk, little more reward.
Yeah, of course, depends what market you're, which one do a medium term rental. Not wisdom markets are the same. You and I, knowing what we do, we love to promote the markets in the Midwest and South and Southeast.
Right.
We feel fast growing emerging market in the South and Southeast, especially in Florida and Texas, is prime is prime for mental space because of the population and job growth and what have you. But other people swear other MTR, mental MTR model, you can successfully do this anywhere in the country, really. It doesn't matter. You can do it in California, you can do it in Midwest, you can do it in obscure locations. Could be you can do a mental successfully in Detroit, Michigan, in St. Louis, Missouri, in Indianapolis, Indiana, or even Buffalo, New York.
Exactly.
But you as an owner have to do your research, right? And
Yes.
make sure that market, you can able to clearly show that you can collect around 50% or higher more gross rent on a medium term rental than a long term rental situation in your
Right.
particular market, and you do more research. Who's to say you cannot succeed in your particular neck of woods, right?
Oh,
Right?
absolutely. Yeah, a lot of people do it. So like I said, it's a little more hands-on. You gotta have a little more contact, skin in the game. But I think it's a great strategy for those people that are willing to do that type of work and not get frustrated and give up.
Yeah, that's right. Yeah, it's your mindset, right? It's what is
Exactly.
what's your skill set? What is your mindset? What is your buy box, if you will? It's not for every. In fact, those investing is not for everybody. Let alone short term,
That's true.
long term, medium term, doesn't matter. You got to put in the sweat equity. You got to do the work. You got to make
Yeah,
some effort at
exactly.
least upfront. Regardless of what investment model you're doing.
Exactly.
Like I said, blood and sweat and tears is worth it. You have to set up the process, the procedures. Once you set up at the beginning, then after that it will be easy. Shouldn't require too much work, and you can still scale the mental scenario. One more thing I want to share something. I'm slowly educating my network to potentially to convert many of our investors have purchased in the past years and years ago, right? In many markets in the country that I promoting for my network off and on. There's a lot of opportunity for our investors that purchase properties from our network in North Carolina or in Alabama or in Midwest or in Florida, Texas, and Georgia, wherever. They have potential to convert their long-term rental into mid-term rental.
Absolutely.
But
Absolutely.
one key thing I want to share, I'm sure you'll agree. Any investors, when they buy rental property, they need to look at primary goal for long-term rental. That is a benchmark. There's a foundation.
Mhm.
There's a low risk
Foundation.
module. Because
Mhm.
if you want to promote your long-term rental in transition into medium-term rental, for whatever reason, the worst case scenario, if medium-term rental that uh, does not work for whatever reason, you can
You
always
can
pick
always go
back
back. That's
to
right.
long-term rental.
Mhm. Mhm.
A lot of people make the mistake of
Mhm.
buying a mid-term rental or even short-term rental based on the excitement at the moment that, oh, I can collect so much more rent, the cash flow is so
Right.
great. Let's
Right.
buy property for the pure purpose of short-term rental or medium-term rental and ignore that the long-term rental, which is the simple
Right.
strategy. With that in mind, Jimmy, let's go over the last investment methodology, short-term rental, Airbnb model.
Mhm.
Uh, with that in mind, my takeaway for the short-term rental is the pros and cons. Of pros are yes, if you buy the short-term rental Airbnb strategy in a very good occasion
Right.
type market and you have a unique property, then you could collect huge amount of rent, right? And the cash flow is a lot higher than long-term rental and
Mhm.
it's higher than medium-term rental, depending on the market. Like short-term rental Some people think, oh, Airbnb bust. You heard a term this past couple of years, Airbnb and
Airbnb.
bust. I mean, look, Airbnb is not going to go away. Okay.
Right.
And a lot of the negative headlines, it says that, oh, Airbnb went bust because a lot of people lost a lot of money. Airbnb doesn't work in certain markets due to the pandemic, whatever. We're not going to go into that. But Airbnb, short-term rental marketplace, it's no different than long-term rental. It all depends on what market you're doing, right?
Exactly.
Because every market is hyper local. Every market is not just local, it's hyper local down to the street, down to the neighborhood. Right.
Yes.
And the cons of social long-term rental the cons are, in my opinion, that depending on where you buy, they could be very costly, especially if you do not own any properties yet. If you buy a
Hmm.
property for sole purpose of long-term rental, the property purchase right now
Hmm.
could cost you $500,000 or
Right.
$1 million to
Right.
make your short-term rental Airbnb profitable.
Profitable. Right.
Right?
Correct.
Not the con, and the other cons are tremendous amount of effort you have to do.
Lot of
You
work.
oftentimes you have to be there to manage your property, self-manage or whatever, and then the cons are the wear and tear. You have guests coming in. You have to be. You have to, the mindset you have as a short-term rental owner is that you're in the hospitality business. You are
Like
in
a
the,
hotel. Exactly.
or you willing to be a hotel owner.
Right. Exactly.
Hotel owner, a short-term Airbnb, you are almost like I wouldn't say, I'm not going to say full-time. Mindset is such that it is, you're running a business.
Hmm.
You have to be there, not physically. A lot of people can do Airbnb remotely, passively, from far away. It's doable,
Hmm.
but it's very challenging.
It's very
It's
challenging.
more time you need to run the STR, short-term rental STR model. And the cons are wear and tear, the maintenance costs, the repair costs. And those, a lot of people don't know how to do the numbers. It's a
Right.
numbers game. You have to understand what are the vacancy factor when you're Airbnb or not rented in any given time during off season or whatever. If you still have a large mortgage on that
Right.
property, you
Right.
still have to pay your mortgage. You still have to pay your taxes. You still
Mhm.
have to pay your insurance and property management fee if applicable. And the fixed cost, the ongoing fixed cost can destroy your profit model on the short term. If you have a seasonal winter situation, like in your
Right.
market, wherever it is. So people, when I found, when I consult with short-term rental, even though that's not my investment space, they
Right.
not know how to calculate the cash flow, the debt obligation, the
Mhm.
numbers for any given month, any given year. You look at the high season, the low season, how much can you collect on a short-term rental situation and all that. A lot of people, they exaggerate. And I see other real estate podcasts when they interview the
Right.
short-term rental people,
Right. Mhm.
they exaggerate their profit margin. They go, oh,
Mhm.
my gross rent is $20,000 a month. Yeah, but that's only for 2 months out of the year. And that
Exactly.
gross rent, two months out of the year, when that gross rent on the high season is gone, guess what? You have a much lower rate during the off season. And what about the vacancy factor, right? That'll,
Right.
that has to factor in your total numbers crunching.
Mhm.
As a business owner, especially as a short-term business owner, you do not know how to calculate the monthly cost, monthly expenses, and profit margin. And a lot of people don't, right? A lot of people bad math. I'm
Mhm.
not saying you have to be a
Right.
mathematical genius in order to crunch the numbers, but especially for short-term renters, if you are not a good business owner, if
Mhm.
you if you're going over your head, I can't do hospitality. I'm not a hotel owner. To exit from a short-term rental situation, that
Mhm.
is of course you. What if you can't handle it?
Right.
Okay.
Yeah.
The short-term rental. Yet if you sell it, what about the market is not conducive selling? You may lose a value. You may not gain the equity if you sell it at the wrong time in the market. So the maintenance costs, the high repair costs, the wear and tear, and some short-term tenants are we hear the story
Mhm.
more often than not. They trash your house and they because you have so many guests throughout. If you rent 2 or 3 days each time in a given month, you have like 7, 8, 9 potential Airbnb guests.
Mhm.
Well, imagine it only take 1 or 2 very bad tenants, very bad
Mhm.
guests to really destroy your house.
Exactly.
How you can take care of that? So
Right.
those
Yeah,
and
it
a
really
lot.
oh, no, good. I'm sorry.
Yeah, let me finish. And a lot of times, many more and more of the locations they are they do not allow Airbnb anymore, right? Doing away many
Mhm.
cities throughout the country, they do not allow
Mhm.
Airbnb shorter than 30 days. If you have an Airbnb focused house, you cannot convert it to a long-term rental because
Right.
the Airbnb houses cost so much. You can't, if you convert it to long-term rent, you're not going to collect cash
Mhm.
flow. Rent is not going to cover your mortgage because you bought an Airbnb property at the peak of the pandemic, maybe for $500 to $1 million, and you can't
Mhm.
rent. So anyway, all right, enough for my analysis. What
Yeah.
is your project?
Oh, it's so interesting. I was listening as I've been listening to you talk. With the 3 different strategies, I always look at things in a comparison. Like a long-term strategy would be fairly low risk. Mid-term strategy would be a medium risk, which is interesting. They both start with the same letter. And then the short term is more of a high risk. Now, the risk goes with the reward. If you have a high risk, you're going to get a higher return. But I think the people need to understand, and I think you've explained it real well, especially with the short term, there's a lot of moving parts. And I think of people, a lot of investors or potential investors or think that, oh, this is a great market for me to get in. First of all, I wouldn't advise if that's your first investment property, I wouldn't advise doing that. Absolutely not, because you're going to lose your shirt. And it's, like I said, it's a lot of moving parts. It's moving very fast. You got to know how to read the numbers. You got to know how to understand just everything. Like you said, the risk of having multiple people running through your property on a weekly basis or a monthly basis, very high potential for property being damaged. You've seen all the news where they have these rave parties and they do an Airbnb on the weekend and then by the Sunday night the place is trashed. So, like I said, there is a place for it. But if I were a brand new investor, that would not be my first strategy. I would definitely look at doing something long term and then work your way up the ladder, maybe to the midterm and then the short term.
Why? Wow, I couldn't have said it better. We have a perfect recap to the pros and cons about all 3 investment models. Really, you and I, we're not trying to be negative. We're just trying to
Right.
be lifting. And we're being transparent.
Right.
And we speak from experience. I've been doing this
Right.
several decades,
Mhm.
mainly long-term model. As you, Julie, as you've been aware, you've been part of my network for several years. I'm slowly promoting medium-term rental
Right.
in one market in South Texas, especially, but in other markets that we're promoting, even in Alabama, Tennessee, that we're promoting through
Right.
Spartan Invest, even in Florida, through my current offerings, I am slowly educating my investors to think about converting some of the houses
Right.
into a mid-term rental. So,
Mhm.
a low risk strategy, you should start with, my opinion, at least for right now, buy a duplex, triplex, and fourplex
Mhm.
for long-term rental. Okay.
Absolutely.
Then convert one of the units from
Right.
those multi-unit into midterm to see how it goes. Test it out. If it's
Mhm.
not successful, like when I said,
Right.
always go back to long-term rental and still cash
Absolutely.
flow.
Absolutely.
If it's successful, hey, run it, scale it, achieve massive cash flow increase in doing midterm rental. But you gotta take the risk. You gotta do your research, do your due diligence. But
Yes.
Julie, it's the mindset, like each individual, how much time do they have? Or they have a full-time job or whatever. Where you want to, where you gonna buy? Do you have the money to buy a long-term rental, like
Mhm.
medium rental and a short-term rental? Like I said, sometimes they cost a lot more.
Mhm.
Short-term rental, a lot more than long-term rental situation. So you have to be careful. You have to look at your finances, look at budget, what you can afford, what your comfort level, what is your buy box, or
Right.
what's your risk tolerance, what's your personality. You have to ask yourself these four core questions. And there are a lot of mentoring coaches, myself included. I can mentor people,
Mhm.
fee-based coaching, and there are a lot of NTR consultants, experts out there. You can
Right.
leverage their skill set. There are a lot of resources out there to
Mhm.
do all 3. The bottom line is, technically, theoretically speaking, for the foreseeable future, LTR long-term rental, MTR midterm rental, and STR short-term rental Airbnb, they have the chance to be successful. People will, because of technology, people will do it. People will give it a try out there.
Absolutely.
And the systems, technology are available for you. You can do a lot of research at the comfort of your home computer.
Right.
You can, okay, all the three business model, you can do it remotely. Doesn't matter where you live, California, Timbuktu, Africa somewhere,
Right.
or in Alaska. You could be, your home base could be anywhere, and you can do all these three investment model, TR, MTR, STR. You take the risk, you have to do your research, do it right, set up the proper system. You can be successful remotely, passively, and delegate to people on the ground to make you successful, whether you're doing any of this three model. That's my final
Exactly.
takeaway. Any final takeaway you have?
I agree with you 100%. I think the main thing is to do your due diligence, do your research, and then get some support, especially if you're doing like a midterm or short term and it might be a brand new concept for you. Just make sure you get the right type of help and do your due diligence.
Absolutely. With that in mind, that's it. I think we have covered the whole basis. So yeah, we will talk more about this kind of models for the foreseeable future. Okay, thank you for watching. And if you receive any value from this podcast, please like and subscribe to our YouTube channel. And also, if you have not already done so, put your email into my website at the below on the subscription, so you can become an email investor insider free of charge, like part of our network of investors. And you see free education coming into your email inbox every single week. Thank you